Welcome to Daybreak Australia. I'm Haidi Stroud-Watts in Sydney, where markets have just come online.
I'm Annabelle Droulers in Hong Kong. The top stories this hour. Futures signalling a positive start to the Asian session as Wall Street returns to record highs. Yen traders on edge after Japanese intervention warnings.
President Xi urges US business chiefs to invest in China, saying his team can handle any problems facing the economy.
Plus, South Korea and India failed to make the cut for key global bond indexes, stuck on the sidelines for at least 6 more months. Let's kick it off this morning with how we're seeing US futures coming online here. Fairly flat so far in the early moments, but it was yet another record high in the session. We saw US stocks rising. What has really driven the moves over the past few months, because we are, of course, at the end of the first quarter now, has been this expectation of rate cuts that we are going to see 3, perhaps, over the course of this year. So that was certainly the trading dynamic. We saw big tech really leading some of those gains, the likes of Apple, for instance, gaining this session. Nvidia still a little bit under pressure, but what could be pouring a little bit of cold water perhaps on the narrative is what we've heard from the Fed Governor, Christopher Waller, just in the last few minutes, and he's saying that the Fed should delay or perhaps even reduce the number of rate cuts as well, given we are continuing to see that strength in the US economy. So that's certainly perhaps a bit of a shadow that we're getting here, Heidi.
Yeah, take a look, Belle, as we round out what is going to be a holiday shortened trading week in a lot of Asian markets here, of course, ahead of the Easter long weekend. This is a picture when it comes to the ASX 200. We're just about a couple of minutes into the start of that staggered session, but already some green shoots. We're seeing leadership across consumer names, healthcare and materials in particular at the moment. Also watching the Aussie dollar pretty steady, a little bit of weakness there at 65.23. Those comments on economic resilience from Xi Jinping really not adding a great deal of confidence when it comes to this China proxy. Taking up the Aussie boards and having a look at how we're setting up when it comes to Japan, and of course the currency is really what we're going to be focusing on. But if you take a look at how Nikkei futures are setting up at the moment, we're looking pretty positive there, or mild, let's call it flat at the moment. We'll see how that session kind of continues, but the yen is firmly above that 151 level. And take a look at this chart, which really illustrates potentially how much of a headache the resilience in the dollar is going to continue to be when it comes to Japanese policymakers warning against too much weakness in the yen. We've seen dollar yen rebounding from that 34-year high. It had weakened past 151.94 versus the greenback on Wednesday, but really traders have been pretty rattled with that slide to that over 3-decade low, sparking, of course, Japan's warning, saying it is ready to act, keep this up, and will act forcefully in the market to stem that slide. So we did see that message being heeded, at least initially. The question is whether that's going to continue to have an effect. Our FX and rates reporter, Michael Wilson, joins us now. Mike, if it's a divergent story between the Fed and the BOJ still, even after liftoff, can policymakers really do too much verbally to be able to counter this?
The Bank of Japan has to work out what they want. If they want to protect their virtuous cycle, the rates have gone, they've moved on rates, so they've taken all that, they've departed from that regime, but in fact, the rates are like negligible, and the spread, I think it's about 345 points between the US and the 10-year JGB. And look, as long as that's more or less preserved, it might go up and down 10 ticks, but that is enough. If the productivity in the States and returns on stocks and all that are maintained, that's enough to attract people into dollar yen above 150. And they are literally probably almost challenging Ministry of Finance to put up. We have seen reaction to strong jawboning from them, but just to take one thing at a time, within the next hour, we've got the summary of opinions from the last meeting. You might see what was said there. That could maybe set the tone, for the rest of the day. But after that, for dollar yen to meaningful, I suppose the price action has probably been a little bit perverted in the short term. Is that there are these big barriers just above the market, and the funds, the dollar bulls, really want to see that taken out. ironically, that could actually be the trigger for intervention, because it's, you know, those moves higher, they're not based on anything fundamental. It's a synthetic driver, so that would cause Ministry of Finance to act. Now, like you said, we're coming to the Easter long weekend. Half of Europe will be out on Friday. I don't know, but at the same time, it is the last day of Japanese financial year, so I don't think the MOF will come in on the Friday, but I would watch out on the Monday. If we were anywhere 152 plus, they might use the, again, it's another holiday in Europe, or half of Europe, so they might use the opportunity to act and get a lot more bang for their buck. So we could come in on the, you know, on the Tuesday when the trading week properly resumes with a lot lower dollar yen.
I'm curious, Michael, even if we do see any sort of formal intervention like we had at the end of 2022, would that actually last that long?
I think that there's just as many people waiting to buy the dip. And if there's some good levels, that 146.50, a couple of bottoms there. You know, if they intervened not aggressively, but like, you know, check prices or something like that, you might see a move down there just on the shakeout. That's a decent move. That's 500 points. But if they were to trigger through that level through some aggressive intervention, we could go all the way down to like the 100-week moving average, which I think is like 140.50. And I really do think that, you know, funds who have already long, they're holding onto those longs, they're getting the returns, they'll add to those longs, and the people who aren't carrying longs, I'll certainly jump in the pool at that stage and load up, because as long as that dynamic's protected of the spread, people will be happy buyers on dips. So to answer your question, I think it wouldn't have any prolonged effect. Well, I'd probably say weeks at the very most before the rally resumed.
All right, great insights. Thanks. That was our FX and rates reporter, Michael Wilson there. Let's shift now to China, because President Xi Jinping has made his pitch to a group of US CEOs to invest in the country. He met with executives in Beijing, including Blackstone's Steven Schwartzman and Qualcomm's Cristiano Amon.
The respective successes of China and the US are opportunities for each other. As long as both sides regard each other as partners, respect each other, live in peace, and cooperate for win-win results, China-US relations will become better.
For more, our Chief North Asia correspondent Stephen Engel joins us live from Boao, where China is hosting an economic forum. And Steve, it really seemed like Xi came into that meeting with a message that China is open for business. How do you think it was really received, though, by the business community, given you've got those economic and geopolitical concerns as well?
Well, I think the fact that those business leaders were in China for the China Development Forum, some of whom have since come down here to Boao as we wrap up here tomorrow, and that is because they want to get a clear message from China, and there's no better way than to get an audience with the top man. So much consolidation of power has led to him being the arbiter, if you will, of messaging. And again, look, he's smiling. When Xi Jinping walks into a room, he commands respect, no doubt. But he doesn't necessarily light up the room with his smile. One thing that stood out to me, he was congenial, engaging. He took questions. He answered questions. He had a discussion by all accounts. I did see a tweet from Stephen Orlins. He is the president of the U.S. National Committee on U.S.-China Relations. We're trying to get him on here on Bloomberg Television. If you're up in your hotel room here in Boao, because he flew here last night, come on down here and join us, because he tweeted out on X, "I just sat through a meeting between President Xi and U.S. CEOs and other leaders. Xi made a compelling case for why the U.S. and China must cooperate. We were all deeply impressed and recommitted to building a cooperative U.S.-China relationship." So again, this is from a man who was there. Actually, in the group photo, he was standing right next to Xi Jinping. So again, access is very key. And as Xi Jinping himself said, exchanges are the key to rebuilding this fractured U.S.-China relationship.
And Steve, we've already had some great conversations at Boao. What's on the agenda today for you?
Yeah, we're going to continue those great conversations. Hopefully, we're going to have a few more of the Chinese members here who are at BOAO. But just kicking off in the next half hour or so, we're going to have Richard McGregor. He's the Lowy Institute Senior Fellow for Asia. We're going to talk all things about the Xi meeting with U.S. business leaders, as well as the overall situation geopolitically. As you can also see, we're going to talk to the world's two biggest multinational development lenders, obviously Scott Morris of the ADB, Vice President of East Asia, Southeast Asia, and the Pacific, and then Jin Lee Chun, as you see, at 8:30 this morning. He is the president of the China-backed or China-based AIIB, the Asia Infrastructure Investment Bank, and then Henry Wang, also a prominent voice here in China from the Center of China and Globalization. He's the founder and president. So a lot of good discussions coming up on our final day covering the BOAO Forum here on Hainan Island.
Our Chief North Asia correspondent, Stephen Angle, there. We'll have more out of BOAO in the next few hours. But coming up, FTSE Russell holds off on adding South Korea and India to its key bond indexes. We're getting the details on that. But before that, here, why Allspring Global Investments are not ruling out a Fed rate cut in the first half of the year. We get more on their outlook next. This is Bloomberg.
Power, money, culture. As Linda Amin tells the story of Asia's rise through the people who are helping to shape it. This week, navigating the challenges of AI, shifting generations, and talent retention. Recruit Holdings CEO Hisauki Idekoba opens up about the future of employment in Japan and around the world.
More workers don't want to do tough jobs. They prefer to have remote work or flexibility.
Latitude. New episode premieres March 28th, only on Bloomberg.
All right, we're wrapping up the first quarter of trading here, but just taking a look at some of the ways that we're ending, as you can see here, on a bit of a high note, because we've seen a number of assets that have reached record levels during the first 3 months of the year. So you've got the likes of Bitcoin, for instance, so that anticipation around the halving, gold as well, cocoa, bit of a shame for anyone that's celebrating Easter or marking that event, but certainly a number of markets as well. You've got the likes of Japan, Australia, Indonesia, but also importantly the US S&P 500 in turn. But let's discuss the outlook as we approach the second quarter of trading. Bring in our guest. This is Margie Patel, Senior Portfolio Manager for Multi-Asset Solutions at Allspring Global Investments. And Margie, so much of this has been predicated on expectations for a Fed rate cut. What do you think is going to be the key catalyst for markets going into the second quarter?
Well, once again, I think it's going to be what the quarterly earnings reports are. We've had 3 quarters in a row where the earnings have surprised on the upside, and that's really powered the market to these record levels. And so far, listening to companies in between the quarters here, it looks as if the first quarter this year is also going to be pretty strong. And I would say that weighs more heavily than what the Fed does, frankly, if they make a quarter-point cut. I don't think that's nearly as important as what corporations see for the outlook for earnings and also maintaining the very high profit margins that they've had.
Yeah, it's interesting because actually we've seen some analysts out there revising their expectations a little bit lower for earnings growth. So it seems like you're not exactly in that camp.
Well, you know, I think we can see that the economy looks like it's growing modestly, but we've had little dips before. And I think for the last 2 years, ever since the Fed has begun to raise rates, people have underestimated the strength of the economy, the growth in profits. And I think they're still doing that. I think they're still weighing Fed's influence on the economy and on the stock market way too much for the fundamentals. So we'll see about profit margins, but if the profit margins go down a little bit, but revenues come up, companies are in the same position. So we think the surprises once again will be on the upside, stronger than expected.
And that positivity extends to the growth-sensitive names like tech?
Yes, I think tech is going to continue to be a leader, but again, it has to be supported by growth. For example, we've seen Apple have a little stumble here where they seem to have kind of fallen out of the favored 7. So unless a company can show continued earnings, I think that we'll see those just drop off. But I think basically larger cap companies, particularly in the tech space, are going to continue to have very, very strong earnings. Also, industrials, we think, are going to do surprisingly well. So we think the economy is going to broaden out a little bit as far as earnings returns, but we think that tech industrials will probably be the leading sectors.
How do you play the domestic geopolitical risk as we head into November?
Well, I don't think there's actually a tremendous amount of risk in the economy, because when you look at the U.S. economy, basically all sectors look pretty healthy. There's no sector you can point to that looks very vulnerable or likely to go into bad state if the Fed raises rates. So we think that helps to support earnings. I do think that because the Fed has such a very large financing schedule, we might see Treasury yields be a bit above where you might think they should be compared to inflation or compared to economic growth. So optically, that might make stocks look a little bit rich. But I think it's just because Treasuries are a little bit burdened down with a very heavy supply.
Are you wanting much international exposure at the moment?
Well, really, it looks as if the U.S. is going to be one of the growth leaders. I think we'll have economic growth of, say, 2.5% to 3%, which actually is exceeding the growth of most European countries and most developed countries, including Japan. And China's growth is actually moderating. They're talking a 5% is what they estimate they will achieve. We'll see how that goes. But really, that says the margin between the U.S. and other countries is pretty narrow, and that says to me that the U.S. is again going to continue to be a leader because of the strength of the economy.
Maji Patel, Senior Portfolio Manager for Multi-Asset Solutions at Allspring Global Investments. You can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can find that at Daybreak Go. It's also available on the mobile. In the Bloomberg Anywhere app, you can customize your settings so you just get the news on the industries and assets that you care about. This is Bloomberg.
FTSE Russell is holding off on adding South Korea and India to their global bond indexes. The agency says the nations will continue to stay on their watch list. Instead, let's bring in our Asia FX and rates reporter Huyun Kim, joining us now from Seoul. And Huyun, we know that India and Korea really do want to see this inclusion happening, but it didn't take effect this time around. So what happened exactly?
The FTSE Russell, so one of the global index providers, has held back adding India and South Korea to its key global and emerging markets bond indexes, once again, delaying the country's weight to be added to these indexes by at least another 6 months. So the decision comes not as a very big surprise, to be honest, though, because talking to a lot of global investors, they've said that they don't expect the index that it'd be too early for the countries to be added to the indexes this month. In the case of Korea, the government has made a lot of changes so far in improving global access to its local markets, but a lot of the changes are still underway. And most notably, the government will be extending the local one's trading hours in July. So global investors will look at that and see how that works out before they decide whether Korea is indeed accessible or not. For India, not a lot of changes have been made since September, when FTSE held back adding the country to its indexes in the last review. So overall, the results weren't that surprising. Outside of Korea, we have India and we have Vietnam and Pakistan from the equity side. Vietnam will keep its status as frontier market, and Pakistan will stay on the watch list for potential demotion to frontier market status from secondary emerging markets.
When is the next review, and do we expect progress to be made before then? I know that South Korea has made some efforts to open its markets to foreign investors.
So FTSE Russell does these reviews twice a year, once in March and once in September. Global investors have said Korea will have a better chance to be added to the index in September. So if it does make it into the index, the Korean government has said, citing global investors, that the index inclusion could lure up to about $70 billion into the local bond market. So it's a positive. But even if it doesn't make it into the index this September, the general view is that the country is headed into the inclusion at some point. So generally speaking, even whether or not it is included this September or not, we're expecting some more additional bond inflows into the country.
Asia FX and rates reporter Huyun Kim there. Let's take a look at one of the other stories that we're following closely. US Treasury Secretary Janet Yellen has slammed China's use of subsidies to give its manufacturers in new industries a competitive edge. She told MSNBC that state support distorts the global economy, and she plans to press China in an upcoming visit. Yellen says she wants a constructive dialogue with Beijing on the issue rather than threatening retaliation.
And Nissan says it's confident its China strategy of developing EVs locally is the right one for the market. Senior Vice President Jeremy Papin told us more about balancing a regionalized strategy in China while competing globally in other markets.
Regional size is what matters. China for China at Nissan is something that's working very well, and we will be launching in China over the next few years 4 new energy vehicles completely developed, localized and produced obviously by our Chinese for China business. And then elsewhere in the US, in Europe, or in our Japan business, we're trying to leverage global scale where it works or regional scale where it can. We've got a very big presence in North America, both in US, Canada, and in Mexico. And there's enough volume to generate, again, the economies of scale to be competitive. And being competitive just means bringing the cars at the right price for the customers to be very happy with those.
The question that Lisa asked, though, I think is a really important one, and it plays into this discussion that we are having. Can you generate global scale when it feels like these markets are becoming increasingly regional? And you mentioned the regional effort. I want to understand, and I'll ask you direct, what happens if we get the former president coming into power and he doesn't just put big tariffs on what's happening in BYD and with Chinese automakers in Mexico? He does it across the board, puts the walls up and shuts everything down. If we shut down the global auto market, it becomes heavily regionalized. Does it change what you do, or do you think the market was already moving in this direction?
I think the market is moving. I mean, with COVID and the semiconductor crisis, we've been obviously much more knowledgeable and careful as to how the logistics routes are set up across the industry. We've been thinking about dual sourcing and more insuring of the activities. And so that's a trend that, you know, we want to continue. Building where you sell is a recipe for success in this industry. And so we are obviously very committed to making investments in North America that will help manufacture all the vehicles that will be sold here.
That was the Nissan Motor SVP, Jeremy Papin. They're speaking with our colleague, Jonathan Ferro. Well, coming up on Daybreak, Namura Executive Officer Christopher Wilcox shares his outlook on Japan. Take a listen to how the Bank of Japan's historic high could impact their business next. This is Bloomberg.
I think the Fed's view is if inflation's stickier and more stubborn than they want, they'll just keep rates at the current level longer, or they'll reduce the pace of rate cuts. I don't really think the Powell Fed is thinking about hiking anymore right now. I think they think they're done.
That was the former Fed Vice Chair Richard Clarida there with his outlook on where rates are headed. But that narrative of high for longer is something that's sort of seeping in late trade this morning, because we just heard from the Fed Governor, Christopher Waller, saying there's no rush to cut and that perhaps Fed rate cuts should be delayed or even reduce the number of those that are being anticipated by officials and as well by the market, of course. But heading into the end of the first quarter here, you can see quite a lot of optimism, at least coming through in the Aussie session so far. 30 minutes into the trading debut, you're also looking ahead to the outlook for Japanese markets, fairly flat so far, with US futures likewise trading steady. But it was that move high for US stocks into the close, and yet another record that we're seeing. Big focus, of course, on the Japanese yen there, because you're holding above that 151 mark. The question is, Heidi, when are we going to see any sort of more formal intervention, given the amount of jawboning that we've had across the course of this week and not really doing much to dissuade traders at this point in time?
Yeah, like what we were talking about earlier, perhaps the Bank of Japan really needs to decide what its priorities are, right, in terms of where we go for the yen. Let's get some more on that, as well as some analysis on the Bank of Japan's policy path. Now, post liftoff, our finance editor Joyce Koh is in Tokyo with a special guest. Joyce.
Hi, yes, we have Chris Wilcox, who's the head of wholesale banking for Namura, Japan's largest brokerage. So welcome, Chris. Thank you very much for joining us today. It's been such an intense and exciting time for Japan's financial market, with the BOJ finally raising rates for the first time in many, many years. What impact has that had on your business?
So I think there's a real sense that there's some change in the Japanese economy over the last year or so. So I mean, that has led to a very different sentiment. It's probably fair to say Japan's been the most exciting market on the globe in the last year. So obviously, as a Japanese institution that can bring Japan markets to the rest of the world, it's been a really good period. It makes us very relevant. I can get any meeting I want right now to talk about Japan, because most people in the world have an interest in this market.
Great. Let's talk about the yen. It's the talk of the town right now, with the yen hitting the lowest level since 1990. How do you see this playing out? I mean, how much speculation do you see in the market, and how are your traders positioning for the possibility of an intervention in the currency market?
Sure. I mean, obviously, it's a big story right now, but the yen has been flirting with weakness a bit for the last year or so. Our medium-term forecast is actually for the yen to strengthen somewhat. I think over the next year or so, we think it should head back towards 140, primarily driven by the thoughts of the Fed easing further down the road and somewhat tighter Japan policy. So we think that the medium-term picture would be for a slightly stronger yen. Obviously, right now, it's flirting with its lowest levels ever. My thoughts are, central banks tend to intervene when they can surprise the market, and we're all talking about it right now. So I think they'll prefer to talk than to act, but obviously, you never know.
How much speculation do you see in the market right now?
A bit. It's obviously a big story, but I think for us the big picture is that we're seeing a lot of foreign interest in the Japan equity markets and other parts of Japan. So the yen isn't a sort of totally standout issue.
Great, thank you. And Chris, I mean, let's talk about the business. I mean, it's such a key part of Nomura's business. You had a solid third quarter, and it puts the business on track to exceed last year's performance. There's still quite a gap to the 130 billion yen in pre-tax profit that you aim to achieve by March next year. How confident are you to achieving this target, and how do you intend to get there?
Sure. Yeah, this year's been an interesting year. It's had some pluses and minuses. For us, it's very much a rebuild year. There are a number of parts of our business that we have restructured and re-engineered to set us up for success in the medium term, including the next year. And I think if you think about that, you look at from when I took over the business, which was October 22, we have incrementally improved the performance of all of those businesses on each quarter for 5 quarters in a row. So we feel very good about the direction of the business. We feel very good about the actions that we've taken. We've really focused on globalizing our business and taking that globalization to the next level. We focused on replacing talent and retaining talent in our business, which has been a really important part of our success. And what we're really driving through now is a very structured and data-driven focus on clients, because we've spent the last few years and we've built some amazing capabilities, and now we need to make sure that we are very effective at taking them to clients. So we will need good markets. Clearly, over the last couple of years, there's been some periods where the markets have been challenging, and you've seen the wallets in the industry as a whole shrinking. We've gone against that trend this year by growing our wallet share and our market share. So, you know, predictions are always dangerous, but we feel very confident.
That's great. A couple of things I wanted to get your expansive thoughts on: the talent aspect and also right-sized for market activity. And some of those markets, as you say, have been more challenging. Do you feel like the number of bankers and talent that you have is the right size, or do you see the need potentially for more adjustments?
We've made a lot of adjustments this year, but if you look at the headcount around my business, it's roughly flat. And looking forward into the next year, we expect that to be the same. Having said that, what that disguises is a very significant upgrading of talent that we've done within the business to put ourselves in a position where we feel confident about the future. So we feel pretty right-sized right now. And I think the opportunities are pretty strong.
How are costs looking?
Costs, I mean, I think if you ask any business person, costs are always too high. We've done a lot of work on costs this year. We had a publicly stated target for my business to reduce costs by about $150 million. We will exceed that saving. But actually, more importantly to that is the medium-term things that we're doing. And so there's a bunch of structural changes that we're making across the business, which have, as you will know, a little bit of a J-curve associated with them, but which we think will feed through into a lower structural cost base for the firm over the next 2 to 5 years.
So, Chris, I mean, Namura was profitable in each of its 3 overseas regions for the first time in 3 years. How was that achieved, and what do you intend to do to sustain the momentum for this?
So I think the way it was achieved was some of the things we said earlier. Firstly, we've globalized the business, so all of our lines of business are now have global heads. That globalization includes Japan, because with Japan's new relevance to all of the international clients, it's a really important advantage for us as a firm to be able to take Japan to our global client base, and vice versa. Increasingly, there's appetite in Japan for international products as well. So I think, you know, one of the things that we've really done is focus on our client business. We've got really, really good product capabilities, and the client business market share has grown significantly over the year, and we aim to see that continue over the next year.
Great. Christopher, I wanted to ask you about private markets. What sort of endeavours is Namura making there, and what kind of opportunities and risks? What's that assessment for you?
Yeah, look, private markets is the big growth story, and if you're not talking about Japan, you're probably talking about private markets. And we've seen massive growth over the last few years. We have sort of 2 different approaches in private markets. Firstly, within the wholesale business, we have been focusing on the private markets businesses that we do, whether that's in the leverage finance space, or whether it's in some of the asset-backed financing that we do in, for example, infrastructure and power, or CLOs and the whole of our securitized products complex. But on the other side of the firm, in the asset management side, we're making investments in building our private markets capabilities there. And we have, I think we recently announced the formation of Namura Capital Management in the US, and that's part of a sort of medium-term strategy to focus on private markets on that side of the firm as well.
Great. Chris, so 3 years ago, Namura managed to convince you to come out of retirement during one of the most tumultuous periods in its history. What do you think are the biggest changes you've made, and what more is there to do, and how are you thinking about retirement these days?
Well, I'm certainly not retired anymore. So yes, it was 3 years ago. I'd look to take a year out and do some of the things that you want to do before you get too old to do them. Unfortunately, COVID made that more difficult than I thought it was going to be, and I was looking for a job anyway. I think when I had a number of firms actually approaching me at that time, and Namura was the one I chose to go with, mainly because I felt the determination of the senior management to invest in their business and grow their business was very inspiring. So it was an easy choice to make at the time, even though optically I was walking into a pretty challenging situation. And I think that was a great decision. So actually, I'm not really thinking about retirement anymore, because I'm excited about the opportunities that we have over the next few years. We've really got an interesting program to grow this business, and I think there's change going on all the way through Namura. It's not just the wholesale business; it's the retail business and the asset management business as well. So it's a very exciting time for our firm.
Thank you. Thank you very much. And we have Chris Wilcox, Head of Wholesale Banking at Namura.
Really great conversation there. Our Bloomberg Finance Editor Joyce Koh there in Tokyo as well. Coming up next, we'll be back live to the Boao Forum with Richard McGregor of the Lowy Institute joining us. President Xi Jinping, of course, making his investment pitch direct to US CEOs. We get his take next. This is Bloomberg.
Let's head back now to the Boao Forum for Asia on China's Hainan Island, and Stephen Engel is joining us again.
Hey, Annabelle, thanks a lot. Let's kick off our programming today with Richard McGregor. He is the Lowy Institute Senior Fellow for East Asia, and I have a bug flying around my eyes right now. All right, we've heard from Xi Jinping up in Beijing. He is courting or trying to put on a charm offensive for U.S. businesses. Do you think it will work? There are competing and conflicting messages coming from Beijing through messaging and also policy.
Absolutely. I mean, this has been the most striking thing about China in the last year, utter policy volatility. One day, FDI, we love FDI, win-win cooperation, speeches at Davos, what we saw yesterday in Beijing with a meeting with the American businessmen. The next day, the anti-espionage law, raiding foreign companies and so forth. So getting clarity of messaging has been very difficult for Beijing, particularly as you want to have that sort of clarity continuing for a long time, not in short bursts. So I think it will have an impact up to a point, but in the sorts of people he had in the meeting, he's a little bit preaching to the choir. There's other people he would have to persuade.
Right, so there has to be follow-through and implementation on promises and more clarity on policy, obviously. Are we getting any of that here at the Boao Forum, which seems a little bit more muted than in years past? Granted, the top men are not here. Later this morning, we're going to get the opening plenary from the third man on the standing committee, that is Zhang, not Xi or Li.
Absolutely, I think it does. I mean, you've come for many years. I first came about 20 years ago. It seems quite subdued to me. We aren't getting the very top people. Xi's in Beijing. Li Qiang, the Premier, is not coming. We haven't got the sort of broad representation of business leaders here. A few Americans, but very few American voices, and very few European voices, particularly European and American voices which are discordant, critical. We're not hearing many of those messages here. It's much more focused on the Chinese agenda. Now, obviously, a lot of that is a positive agenda. It's, green energy, climate change, attempts to deal with it, issues like hydrogen and the like. That's the sort of global agenda. But the geopolitical agenda, remember, it's Boao Forum for Asia.
Right.
So we're talking about the geopolitics in many respects of Asia. And that is not pro-Western.
Yeah.
And at times pretty anti-American, actually.
Well, that's one thing that struck me is, again, a lot of the participants of the panels that I've attended talked up the multilateral approach and condemned unilateralism. And that's a veiled, obviously, a jab at the United States. Do you feel that maybe this Boao Forum is just too China-centric from their messaging?
Well, it's hard to say. I mean, we might say that, but a lot of the people on the panels from Russia, from India, I think the former president of Slovenia was here.
Yep.
They sort of are in accord with a lot of the Chinese agenda. And that's something I think people in Western countries should be aware of, that the Chinese message on China leading the global south, China saying that we will place developing countries at the center of the global story, the Americans won't. The West, the so-called rules-based order led by the US, is much smaller than many people realize. Now, I'm just giving you the Chinese talking points here. I'm not endorsing them.
Right.
But we shouldn't underestimate the power of Chinese messaging, actually, because there is a competition going on, no matter what Xi did with the business leaders. It's not just a competition over the economy. It's not just a competition over technology. It's a competition of ideas, of world systems. And I think if you don't have to listen too closely here at Boao to really feel that.
True. Do you feel, we're hearing that Janet Yellen will be here next week, perhaps, and that she's going to really push the Chinese on the fears that there's this excess industrial capacity is going to be shipped off, and distort global trade even further and drive down prices, and essentially, of course, brings up the issues of dumping and the subsidies that perhaps the Chinese is pumping into green energy products and the like. The new three, right? New energy vehicles, batteries, and solar. Does that open the front on yet another battle between China and the United States?
Well, I think it's coming. I suspect Janet Yellen is the best person to deliver that message. I'm not going to say she's a popular figure in China, but she's respected. She's not considered to be an ideologue like some members of the Biden administration. So I would say she's well worth listening to, because it's in America, I think we're going to see Chinese EVs stopped one way or another. Europe is the big game at the moment with the European investigation into subsidies or dumping. So I think, it's a real thing about Chinese overproduction and, sending it offshore. There's however many dozens of Chinese EV companies. They can't all make money in China. They have to sell offshore. And I think Europe and America are going to push back against that.
Geopolitical tensions obviously still not necessarily on the back burner, but they're at the fore in the South China Sea with the Philippines and China right now. Obviously, Taiwan, the inauguration of Lai Ching-te is coming up in May. What's kind of on your radar geopolitically in this part of the world?
Yeah, we haven't heard much about Taiwan here. It's mainly a business forum, a little bit about the Philippines, but nothing very sort of meaty. Sorry, I've got a bug as well.
There's a bug between us.
In the air in Hainan, I might have swallowed that one. Don't know if the camera caught that. But I think, Taiwan is interesting. The Chinese response post the January election, William Lai Ching-te was elected. He was not Beijing's favoured candidate. Yeah. Beijing has had a sort of, since then, there's been no big sort of military response. It's been calculated, small-scale responses, and that, of course, gives Beijing the ability to dial it up at some stage. Right. So we have to be very wary around the inauguration, which I think is in May.
May 20th.
And see what happens then, because Beijing is not resting on this issue.
No, not at all. Richard McGregor, thanks so much for your time at Bloomberg Television. I'm sorry about the bugs. We'll try to fumigate the place.
No problem.
We're outdoors, though. In Hainan Island, more coming up. Bam, 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 bam. Interviews coming up from the Boao Forum. Back to you guys, Haidi and Annabelle.
Yeah, interviews and taking out bugs at the same time. There's a lot that Stephen Engel, our Chief North Asia correspondent, is dealing with there in Boao, and we'll be bringing him back with more conversations, of course, from the Boao Forum. Asia Development Bank Scott Morris will be with us in the next hour. The global labour landscape is changing fast. With the rise of remote work, AI and a growing emphasis on diversity, the CEO of Recruit Holdings, that's the company behind the world's largest job search site, gives us his outlook on the latest episode of Latitude with Haslinda Amin. Here's a preview of that conversation.
All developed countries are having less supply of labor force. For example, in the U.S., 10 years ago, 20 years ago, U.S. had every year additional 2 million, 3 million working age population. But 2018, 2019, U.S. had almost zero additional working age population. In Japan, of course, the number of working age population is decreasing.
Recruit is the holding company of employer review site Glassdoor.com and Indeed.com, the world's largest job search site, which Recruit acquired more than 10 years ago for $1 billion. And with that acquisition comes a deep pool of data on the job market.
Remote work is still strong from the job seeker point of view. So job seekers started to look for remote work jobs or flexible jobs. That's a big trend when we compare before COVID and after COVID. But a number of job postings which is having remote work is shrinking a little bit, but it's still way higher than the pre-pandemic level.
And you can see that discussion in full on Latitude with Haslinda Amin beginning this Thursday here on Bloomberg Television. And just as we've been hearing from Recruit Holdings and that focus on wages, actually the BOJ Summary of Opinions has been coming out for the March policy meeting, that historic meeting where we saw the hike in rates. And the sort of key takeaway we're getting on this so far is that this is not a shift, at least one member is saying this, toward a tightening regime, even though others are saying that the achievement of the price target had come into sight. We're certainly going to want to really delve into the details of these. Again, it seems like a cautious policy stance coming through, given that yes, it was a hike, but it was still a very dovish hike coming through, and that is really what's led to that currency weakness. At the same time, you've got that dollar strength that's continuing to hold with the expectation Fed rate cuts might not be around the corner just yet. The Japanese yen fairly steady off that, but still, Heidi, quite an important set of meeting minutes.
It's a crucial set of meeting minutes because we do, Belle, as you say, want to get a little bit more colour and context in terms of what these BOJ members are thinking, because the messaging and the amount of what they did really having a negligible market impact in terms of any huge volatility in both the currency and equity markets, right? And in fact, that sort of popular trade that we've seen for the yen and the Nikkei has just continued since then, to the point where, of course, that divergence being perceived between the Fed and the BOJ is at a point now where, of course, we have seen verbal intervention to try and prevent any further weakness in the yen. It's unlikely that this summary is likely to change that. This is Bloomberg.